Good morning, everyone, and welcome back to this new edition of the weekly analysis. Let's do a recap, of course, of what happened last week. The markets have resumed their upward trend, as we pointed out. There are signs of something that could put the markets on edge. But then, as usual, everything is promptly denied and everything returns to normal. Also, thanks to the easing of geopolitical tensions, with the announcement of the meeting between Trump and Putin, which certainly brought further calm to the market, with expectations that we will see whether or not they are met, depending on the agreements that will come out of this meeting. Well, the week ahead, in my considered opinion, has two particularly important data points that we should closely monitor. Tomorrow, the highly anticipated CPI, and then on Thursday, the crucial US PPI, which will certainly give us further valuable indications and insights into the economic landscape. These indications could push the Fed to move earlier and cut rates as expected by Trump and essentially by the markets. So if the CPI comes in stronger than expected, it would undermine this possibility of a rate cut and could be a bit of a cold shower for the markets, both for the indices and for bonds. So let's pay close attention to this data on Tuesday, and certainly also to Thursday's PPI, which will reflect a bit the impact of tariffs on inflation and therefore on consumer prices. We'll see what the impact will be, and the markets will definitely have another data point to interpret, just as the Fed will have these two additional elements to make its own assessments, its evaluations. That said, let's obviously move on to looking at the charts from an operational point of view. Let's start with the Nasdaq futures, as we usually do. I wanted to show you this particular chart that I pointed out last week as a possible head and shoulders pattern forming. This is indeed a head and shoulders pattern, but it had this distinct left shoulder, the prominent head, and this right shoulder, which had started to form but was then completely invalidated and subsequently reversed. So the pattern has been absolutely and entirely nullified. Most likely we will continue along this current path with prices that could very well retest their all-time highs during this week if everything goes according to the established plan. Volatility also continues to decline, and this definitely supports the current upward momentum in the markets. However, we need to be careful because volatility is quite compressed, so it would take very little for it to suddenly spike. Also, as I've pointed out several times, at the moment the 30-day implied volatility is exceeding the 90-day implied volatility, and this could be a signal for many control funds to exit the market, which could bring some turbulence. But I repeat, at the moment there are no signs of this happening. Technically the charts are still well set up for an upward trend, and everything seems to be moving in that direction. But obviously we need to be ready, because as the old Wall Street saying goes, the bears are always ready to press the ground floor button when all the bulls have gotten into the elevator. So let's always stay extremely vigilant. Let's take a look at some weekly levels for the Nasdaq. Again, as for the upward movement, we obviously need to keep an eye on these previous highs that were recorded around 840. A break above these could definitely open the way for moves toward the 24,000, 24,100 area for sure. Holding above these highs could definitely keep the price steady, perhaps while waiting to see how the week develops. The week which, as I keep saying, for me, Tuesday and Thursday will be crucial because of the two important data releases we're expecting. On the downside, the level to watch is this 23.8, 8 to 10 area, which basically stopped this decline. So that's definitely the level to monitor. On the upside, as mentioned, 23,830, 23,840. So 23,830 and 23,840 are definitely the levels to watch for a move higher. Let's obviously take a look at ES, which in my opinion has an important support here around the 6,320, 6,325 area. And this is the level to monitor on the downside. On the upside, of course, we need to watch this high here, which is currently around 6,430, because a break above this could definitely trigger larger moves and even a test of the 6,500 area, obviously always supported by macroeconomic data and easing geopolitical tensions. So the situation is quite straightforward. I repeat, for ES to update its highs, it would need to break through this level here, which is 6,470. This is the first barrier we need to overcome again, 6,420, 6,430. And then the next obstacle is 6,470. Obviously, breaking through this level would allow the movement to continue, seeing this as just a simple retracement. Let's move on to the other two American futures, starting with the Dow Jones, which here it is in a more or less similar situation, although it has recovered less so far. In fact, it's still quite far from the highs it reached on Thursday, and well, but in any case, it too has started to climb again. Breaking through the 40,400, 40,500 area could definitely trigger moves up to 44,800 or even 45,000. On the downside, of course, we need to keep an eye on 43,900, 44,000, which is definitely the most interesting and supportive area at the moment. Because a break below this level could definitely trigger bearish moves, even down to the 40,500 area, to test the lows recorded at the beginning of August. As for the Russell, here it is. The overall situation is more or less quite similar. It experienced a noticeable pullback on Thursday, but this decline was in a fairly limited and contained way, significantly less than what the S&P 500 and the Nasdaq Composite did in absolute terms during that same period. Right now we're basically moving sideways a bit, and well, 2240 to 2235, 2245, this is definitely the area of greatest interest to break through if we want to aim for broader targets in the 2280, 2300 area. On the downside, let's keep an eye on this, the 2200 area, which seems to be the strongest support, because if that breaks, then we're looking at 2150, 2145 as the next support levels. Let's also take a comprehensive look at the German stock market index, the DAX, which, well, is experiencing some interesting movements. Sorry, on Wednesday, well, it made a nice move up. Last week, it had a strong upward surge, retesting a significant high area, and now it's trading just below, right around the first support area, which we can identify between 20,100 and 23,850. That seems to be the last stop, so the best area for new purchases at the moment. On the upside, let's keep an eye on 24,450 to 24,500, which is definitely the main resistance area. Now let's look at oil, which is continuing its downward trend a bit. Let's take a look. We can maybe put it on a 30-minute chart to get an idea. In short, a beautiful head and shoulders pattern that I had pointed out. The neckline broke and the drop started, bringing prices down to the 63.20 area, which is an important support level. If this support breaks, prices could absolutely fall to the 60 area, because that's the next support zone. On the upside, of course, we need to go back and monitor the central level around the 66, 66.50 area. In my opinion, that's the first zone. Obviously, before that, there's 64.90, which corresponds to this whole area of lows here and highs here. So 64.90 and 66.50 are basically the first resistance levels. On the downside, of course, we're watching 60.50 as a possible target for this drop. Let's also take a look at gold. Here it comes. Well, it was a little bit off at the open, already moving well beyond the daily levels, and now it's actually aiming for a very important support area, which at the present moment is situated between 4,300 3,400, which truly seems to me the most significant and crucial level, and it also perfectly matches the VIX cluster area for this current week. After that, we have 3,380, which could definitely provide stronger support for this downward movement, which also seems quite violent to me and is accompanied by basically good trading volumes. On the upside, obviously, we need to monitor the first area, which is here at 3,450, 3,460, which is definitely the first area of resistance at the moment, and also this one at 3,440, which definitely corresponds to this area of previous highs. For SPX, I drew this line. This is the main support that I can identify. The one at 7.3 really acts as a dividing line between, well, an uptrend and a downtrend. So let's keep an eye on this. It's also, well, an important options level. I almost forgot. I forgot to tell you that on Friday, as you know, for those who trade options, there's a double expiration. There's a double expiry on individual stocks and on indices and fusions. So pay close attention on Friday to this technical expiration if you trade options. Perfect. We've reached the end, well, of this of the weekly analysis. As always, I invite you to leave a like on the video and to follow me on social media. We'll catch up later in the chat. Thank you all for your attention.